Hello, everybody, and welcome to the Trading with Ashley show. If you are in my community, your fingers are probably burning along with your keyboard. We did so many quality trades today. Now, I have been telling all of you that I was primed and ready for earnings season. I have a great way to trade earnings that keep our trades safer, and it gives us an opportunity for some incredible deals on some great profitable companies. Today alone, we were able to create over $6,000 in premium, and these are wonderful quality companies. If I were to put the shares on any of these companies, I would be very proud to own them. So one thing I want to share with all of you, when you are trading over earnings, you want to ensure that you're looking at a strong level of support. You want to look at the expected move, and you want to go a little bit further out in time. That gives the trade a little bit of time to work out in your favor, and if the stock shoots up after earnings, well, then you can usually get out of that trade really quickly and then redeploy that cash somewhere else. So those of you that are in my community, I hope you enjoyed that we had cashed up over the last few weeks and we were ready to go. I wanted to celebrate someone in the community. I got word today from CJ. He is a new millionaire. It's so exciting to see your portfolio when it actually says $1 million and you know you have grown it. He grew his account from about 600,000, a little bit over, to over $1 million in less than a year. He's only been trading since November of last year. CJ, we are so proud of you, and we're happy that you now have this financial freedom and you know how to trade. Okay, so here's what we're going to focus on today. We are going to be looking at Amazon. I want you to raise your hands or maybe leave a comment in the comments if you have received an Amazon package in the last week. I know I have. The Amazon packages come constantly to our house because it's the first place I go for a variety of things. And so if you're like that and you use Amazon a lot, I want you to think about this stock. It's one of the only Mag 7 stocks that's really at a real good value right now. And I'm sure you saw the news today that they are slashing jobs. Looks like they're cutting over 30,000 jobs in the corporate level, and they are using AI to automate about 75% of their workflow. And so I want all of you that may be in corporate America to consider that. It's really important that you realize AI might be coming for your job. So look for alternative ways to make income. Consider trading. It's a wonderful way that you don't have to worry about somebody replacing your job. And so we're going to go into the computer. I'm going to show you some potential trade setups. And I really like the trades that I have found for you today because I have staggered the expiration dates and the strike prices. It's a great way to trade, especially if you want to average down on a stock. So let's go see what I have waiting for you. I can't wait to get into all of the details. Looking a little bit closer into Amazon, one thing to consider is that they've had strong recent performance. In Q2 of 2025, Amazon reported net sales of $167.7 billion, representing a 13% year-over-year growth, and it beat Wall Street estimates. 2, their cloud growth remains pivotal. Its cloud's computing arm, AWS, it grew 19% in Q3 of 2024, and it continues to be a major profit driver. Now, I know that there were some recent outages due to an outage of AWS, but we have seemed to have moved past that since then. Let's consider their advertising business. It is accelerating. Amazon's ad revenue is growing strongly, and it's becoming a higher margin growth factor. That's really important to Wall Street. Also, you have to consider their heavy investment in AI and infrastructure. Amazon is spending heavily on data centers, AI chips, logistics, and fulfillment capabilities, setting itself up for long-term growth, though that creates some margin pressure in the short run. And finally, let's look at forecast and the caution ahead of Q3 earnings. While Amazon beat recent quarters, its guidance for Q3 shows some caution. For example, revenue guidance of about $174 to $179 billion and an operating income range that's wide, signaling investors could watch for margin and expense developments. Next, I want to look at the technicals on Amazon. Now, of all the Mag 7 stocks, this one has the most promise from a technical standpoint, because we are just coming off of that 200-day moving average. Now, I know you've seen a lot of my videos, and I am heavily invested into Leaps, and I purchased them all when we were right here at that 200-day moving average. So they're doing nice right now. They're growing quite a bit. I'm going to hold them over earnings because they go out really far. But when you look at the RSI, it's at 56, meaning there's still plenty of room for Amazon to run from a technical perspective. Now, we are at the top of the band, but that's to be expected with suppressed as Amazon was. Now, if you're looking at levels of support, which is very, very important when you are getting into the earnings game with Amazon, you want to look at a level you would not mind picking Amazon up. So if you're going to do a shorter term trade, then you want to look right here at this 20-day moving average. Now, I noticed just like you that we have the 100-day moving average above it and we have the 50-day moving average. This is the case because of the dynamics that Amazon has seen in the suppression of the stock in the last couple of months. But if you go down to the 20-day moving average, that's at 220. It's not really far off from where we are right now, so we could probably pick up some really good premium. Now, if you're going to go further out, I would go further down. That 200-day moving average, it's strong, and it has shown that it is a supportive level. So I would feel comfortable if I'm going to go out further, maybe to December, I would feel more comfortable going under this 200-day moving average, just so that if I am put the shares, at least I will be getting them at that critical level of support. Now, let's go look at some potential trades that you might want to consider taking this week. I've decided to do a series of trades with Amazon because I want to average down if I'm put the shares. So if I am going to take a very risky trade because it's right after earnings, that would be 1031. Let me show you what I would be looking at. Now, because Amazon is so beat up right now, and when we just now came off of the 200-day moving average, I feel more comfortable going a little bit more aggressive because I know that time is on my side as long as I can hold the shares. And so if I look at, when we were thinking about the different levels of support, I mentioned 220. If I go with this particular option right here, 220, I would have to put up 22,000, and for that, I am going to receive $4.22 a share. So that's $422. And if you look right here, there is a lot of open interest here. Now, I want to bring your attention to this. The delta is 0.338. So there's about a 30 to a 35% chance we will end up here. So if you sell this option, you have to be okay accepting the shares. Otherwise, I would move on to some of the other plays I'm about to show you. For our next trade, I'm going to average down and I'm going to go to 11/21. That's the third Friday of November. For this particular trade, I'm going to focus right here at 215. If you remember, that was the 200-day moving average. This is a great location to pick up a quality stock like Amazon. So if you were to sell the 215 strike, you would need $21,500 and you would get $4.55 a share. So that's $455 for putting up this trade. Now, after earnings, a couple of things could happen. If Amazon surges after earnings, then this trade and the next one I'm about to show you would more than likely whittle down in short order to around a 50% profit. You can exit at that point and then utilize the money being held for other trades. If Amazon pulls down or stays flat, then you're probably going to have to wait a little while longer to let this trade work out, because either you will get out with all your premium and it'll expire worthless, or you might possibly be put the shares when you get to your expiration date at 215. And then finally, with this averaging down, I'm going to go to December, the third Friday in December. And for this trade, I am going to focus right here at the 210 mark. That's paying right now about $5 a share. So it's interesting to note that each of these have a very similar premium, but I am making the trade safer and safer the further out in time I go. And if I put the shares, then I am averaging down my position. So if you were to sell this one, you'd need $21,000 and you're going to receive about $500 in premium. Now, for those of you interested in a put credit spread, because it requires a lot less capital, I would definitely want to go below this 215, 214 level. But for a margin of safety, I'm going to go even lower just to be safe. And we can do that because we're going out further in time. And if you put this trade on before earnings, you're going to enjoy the elevated IV and you're going to get a little bit more premium. Now for this trade, I'm going to go out to January because this gives me time to allow this trade to work out in my favor. Again, if Amazon surges after earnings, I can get out of this in short order, but if not, it does keep my trade a little bit safer. So if I go out to January the 16th, I'm going to start with the 195 strike. I am going to sell to open one contract. Then I'm going to make this a $10 wide spread. It's only going to require $1,000 to put on the trade. So I use the exact same expiration date, but this time I am buying the put and I'm buying it at 185, one contract. So if you put this in here, I'm going to go ahead and put 125 as my potential net credit. And when you preview it, you can get a better indication of how this is going to look. So to put on this trade, it would require $1,000 and I would receive $125 in premium. Now, when you see this 875 down here, and the reason it says that and not 1,000 is it's giving me the credit of 125 against that $1,000. So I like this trade because it does allow a little bit of time for it to work out in my favor, meaning if Amazon sells down, buyers will more than likely step in, and if it surges ahead, I can more than likely get out at 50% in short order. So the way that you calculate the 50%, if you have this trade filled at 125, then once it hits about 65 cents or about 60 cents, you could go ahead and exit and it would release your remaining funds. Now, if we are far above the 195 strike as we get closer, you may decide to just leave this trade on. But if we get anywhere near it, you want to close it in profit just to be safe. Now, if you see that that 200 level does not hold and we are inching closer to the 195, anytime I would say November to December, I would exit the trade at a loss just to be safe. I hope you found this helpful. I hope these trades help and make you a lot of money. If you are not subscribed, I want you to subscribe. I had promised you that I was going to bring the heat this week with a lot of great videos on different trade setups. So I'm hoping to help all of you. Remember, if you're with me trading with Ashley, there is no trader left behind. Now, if you want to know the ins and outs to trading earnings and the formula that I personally use, I'm going to leave that video for you right here.